Hello, wealthy, successful, money-making traders. This is your trader's friend. Thank you for joining me today for another video. I am so glad you could be here with me. And I intended for this next video to be live. However, this morning I missed the opportunity that I was looking for because I'd planned the video around the economic report. But price action came a whole lot quicker than I expected this morning, and we got such a nice spurt up that I was not able to get in on the price action until after the pullback. So I lost the advantage that I was attempting to show you in the video, and you can see that we had all of this long consolidation and we got this beautiful breakout to the upside. Now, with us being short-term traders, and this is the Euro USD on the 15-minute time frame. With us being short-term traders, we would say that the market is trending up, and for us it is trending up. However, it is a greater chance that this is the market correcting itself than it actually being a reversal. Now, it very well could be a reversal in the market, but chances are this is just a market correction in a longer term bearish trend. So do keep that in mind and trade with the trend that you're trading with overall. The tick chart, the 1 minute time frame, those trends are going to switch back and forth, so you're going to want to look for a trend on the larger time frame to trade with when you're trading the smaller time frames like that. Now, this is the Euro USD on the 15-minute time frame, and I do understand that I'm showing you past price action, but guys, the best teacher that you will ever have in the market is your chart, period, bar none. And the most important things to successful trading is two. One is the ability to wait, and two, your discipline. Actually, maybe discipline should have been number one, but it is the ability to wait for a trade and the discipline to get in when you should get in, and the discipline to get out when you see that you've lost your advantage. And it's more important for us as short-term traders when we've lost the advantage to go ahead and get out of the market. Why? Because we are trading against people who are trading longer term time frames. And you can see on a daily time frame, I went to the 4-hour to show you overall we're under the 200 SMA, so we are bearish still on a larger time frame. Now on the 15-minute time frame, you can see that we've broken above that 200 period SMA. Let me shrink that a little bit, and you can see that we got the break and close, and then we went into this period of consolidation before the market continued on in this short-term trend. But longer term, you can see that we are still bearish, and there are people who have been riding this trend out. Let's add a trend line to this just as a reference. So there are people who have been riding this trend out since the beginning, and a lot of these people are still in that trade. So as a short-term trader, when you can see, and you can also see we are at an area of daily resistance here, but as a short-term trend trader, once you get a good trade in the market, then it's pretty much over. And I'm making this video, actually I was supposed to be taking a nap, but I wrote this stuff down and I thought, let me just go ahead and make a video now while it's on my mind. But you can see once you get that spurt of energy, and I know you've heard me say this in the video, it's pretty much over for several hours. So that's the time to go ahead and get out of the market. Once you get that mother lode trade for the day, and sometimes you can get two really good trades, but after that, guys, for the most part, it's over. It's over unless you are just going to trade in this little range bound trading. trading. But after a good spurt of energy in the market, all you're going to get is range bound or choppy. And the ability to wait in the market is supreme. Cut when your rules say cut, and buy when your rules say buy. Now, this is the thing, and I just lost that thought that I was going to tell you, because oh, I know what it was that I was going to tell you, and I want to point this out. You can see that you have more times of consolidation in the market than you will actual trading time. Let me go ahead and mark another period down here. I don't think I need to take you all the way back in the chart, because this is something that you can do for yourself and see it for yourself. But you're going to have more periods of consolidation in your chart than you actually will have trending markets. So please keep that in mind and trade your rules accordingly. Guys, there is nothing 100% in the market. There is nothing 100%. And remember, the trade that made you money yesterday may get you killed today. The exact same setup. There is no setup 100%. And I will tell you, there is a statistic out there that says that 80 to 90% of traders lose money in the market. No, guys, let me just be honest. 100% of the traders lose money in the market. The difference is how much a trader is willing to lose. That's the thing. It is, and I know you've heard this. This is very cliche-ish, but it's about cutting your losses quickly and riding your profits out. And that's the thing that's hard to do. It sounds simple, but in real-time trading is difficult, because no one wants to wait through all of this price action to see what the market's going to do. Now, people like me, I don't wait, honestly. Most of the time, if I see that I have an area of resistance and an area of support, then depending on the way the market moves, once I get a bounce off of this support, well, this is a bullish market, so I would be looking for opportunities to buy. When I get bounces off areas of support, and you can see how that began to constrict even more, I'm looking for buy opportunities. I'm just looking for buy opportunities, buy opportunities, buy opportunities. So then I'm going to buy. Now, if you decide to counter trend trade, which currently is what we're doing, even though we have such a strong move up, if you decide to counter trend trade once you have an established area of resistance and support, then go ahead and decrease the size that you're going to counter trend trade. Because if you have a situation where the market then turns around and it eats your lunch when you have when you've shorted, at this area of resistance, then you're going to have to cut that trade and follow the money. Guys, I just want to remind you that you can absolutely do this, but it is about the waiting for the trade setup, and it's about the discipline to do what you need to do when you need to do it. And I'm sorry, I know I'm a little bit preachy today, but yeah, I got up from my so-called nap to say all of this stuff. But it's hard, guys, when you have a set of rules and you're looking to follow those rules and the market doesn't play fair. But keep in mind, after you get a spurt of energy in the market, you're going to get a longer term range bound, choppy, or consolidation. The spurts of energy are fewer and further between, so please keep that in mind when you are trading. Guys, you can absolutely do this. You can be successful at Forex. Have a terrific pip filled trading week.